What if I told you that you could crack the code to predicting market direction and enter the trading zone with confidence? A legendary trader called Mark Douglas once said, "The market is a mirror, reflecting your own bias, fears, and beliefs." But what if you could discover a secret strategy to decode the market direction using a potent combination of triple time frame, stochastic RSI, and the Bollinger Band? Interesting, right? Okay, as the crypto market continues to evolve, guys, one thing remains constant, and that thing is the need for discipline, consistency, strategy, and a pinch of creativity. With this powerful strategy I'm about to show you, you'll be you'll be the one calling the shots, right? Of course, you're going to be the one calling the shot, and you're going to be the one to dictate the terms and market direction. Like, you're going to be the one in control of the market. But before I go on further, I want to tell you something, right? Do you know the best part of this strategy? It is beginner friendly, meaning a crypto novice with very little experience can use this to make profit off of the market. Now, without wasting much time, let's dive into the strategy. So this strategy requires two indicators and one feature, right? With the first indicator being the stochastic RSI, all right, and then the second indicator being Bollinger Band, and then the feature I'm talking about is the time frame feature. All right, so we're going to use three time frames. For those of us that don't know what time frame is, don't worry, I'm going to break down everything as we move on. So we're going to use the daily time frame, the 4 hours time frame, and then the 5 minutes time frame. Right, so the 1 day time frame determines the overall market direction. But before I tell you what the time frames are going to do, let's head over to trade. All right, so if you want to go to trade, all you have to do is to click on this button right here. All right, click on it, and it's going to bring you to this interface like this. And we are currently on Ethereum USDT. Sorry, we are currently on Ethereum USDT under the 1 day time frame. All right, so those of us that don't know what time frame is, time frame is like a feature on this cryptocurrency platforms that allow us to see the activities that is being done respectively on every time frame that we place it to be. For instance, let me crack it for you. For instance, if we are on the 1 day time frame, just like this, all right, so it's going to be producing candles like this, each and every candle on the daily time frame is representing 1 day. Each and every candle on the daily time frame is being formed after 1 day. All right, so if we are to go to the 4 hours time frame now, if I click on the 4 hours, right, so each of these candles on this 4 hour time frame is representing 4 hours. Each of this candle, so technically 6 of this candle, 1 2 excuse me, 3 4 5 6, so 6 of this candle is representing 1 on the daily time frame. All right, because 6 times 4 hours is going to give us 24, which is 24 hours, making 1 day. All right, so that is just what time frame is. If I go back, if I head to the 1 hour time frame, it means that each and every candle on this interface right here is representing or is being formed after 1 hour. Every hour a new candle is being born. That's just what it means. All right, so like I told you earlier, we are going to use 3 time frames for this strategy. All right, 3 time frames: stock RSI and Bollinger Band. So this is the first time frame, the daily time frame. The daily time frame will be used by us to actually determine the overall market direction. All right, so if we go to the daily time frame right now like this, okay, what we are looking for is to see the overall market direction on the chart. And as we all know, or let me just give a quick quiz, a quick test. I'm giving you 3 seconds. Tell me, what is the overall market direction based on your view right now on this daily time frame? The market direction is going down, right? It's on a bearish direction. It means that Ethereum USDT is going down based on the daily time frame. So each day that is passing by, Ethereum keeps depreciating, going down. So but if you are finding it difficult to distinguish whether the market is going down or up, all you have to do is to use the moving average indicator. All right, okay, so if you want to use the moving average indicator, all you have to do is to go to your indicator settings right here. Let me show you. All right, go to your indicator settings. This is where you find all the technical analysis indicator. All right, so there's this one called moving average, in other words called MA over here. All right, so all you have to do is to toggle on the MA, but the moving average has a lot of lines. All right, but the moving average we are going to use is MA 50, so the line with a value of 50. All we have to do is to go to our indicator settings, clicking on this place. Right, so when you click on this place, it's going to bring you to this interface. Then click on indicators right here. This is Bybit, by the way. So if you click on indicators, The next thing you're going to do is look for moving average right here. So you click on moving average. So you're going to see a lot of moving average with different values. So on mine there's MA7, right? Let me indicate it. Right, there's MA7, there's MA14, and there's MA50. So your own is going to be toggled on. Okay, these boxes right here are going to be toggled on. Let me show you properly. These boxes right here are going to be toggled on. All you have to do is to switch them off just the way I did right here. Okay, and leave only MA50 to be turned on. Right, so when you're done with that, you just click on confirm and then go back to your chart and then toggle on this MA over here. All right, click on MA to toggle it on. So if you click on MA, you're going to see a line appearing. All right, so how can you tell if the market is going bearish on the overall daily time frame? The way you can tell is that if the current price of the market, is below the MA50, then that means the market is going bearish. And this is the current price of the market, and this is the MA50. So technically, the current price, all right, is below MA50. So we have gotten our first confirmation, right? We have made sure that the market is on a bearish direction. So the next thing we have to do is to see, okay, since this market is on a bearish direction, how powerful are the bears over the bulls on the daily time frame? Now that is where the stochastic RSI comes in play, all right, and the Bollinger Band. So all you have to do is to toggle off your moving average because we are done with it. It has finished its job. Thank you. The next thing is to toggle on the Bollinger Band and then go to the remaining indicators, just slide left a bit and then toggle on the stochastic RSI. Mine is already turned on. All right, mine is already toggled on, and this is the stochastic RSI. This is the bar, all right, the lines that comes with the stochastic RSI. The next thing I need to turn on is the Bollinger Band. Okay, so this is the Bollinger Band. This is the Bollinger Band right here. I'll just click on it to turn it on. You're going to see these lines over here. So let's turn off our moving average so we won't get confused on reading the chart. All right, that's great. So this is our stochastic RSI. Okay, and this is our Bollinger Band. We know that the market is going bearish, but how bearish is it going to go? So the stochastic RSI is a technical indicator that actually calculates momentum or strength of bulls and bears in the market, right? We all know that. So, and we know, if you have been following our videos, you'll know that if the stochastic RSI is given a value of 20 and below, all right, let me show you. If the stochastic RSI is given a value, this is where you find the value. If the stochastic RSI is given a value of 20 and below, it means that the market is oversold, right? So if you hear oversold, it technically means that the bears, all right, the sellers have sold a very huge amount of that asset that we are talking about. All right, that means the market is bound to reverse anytime soon from the downside to the upside. All right, but if the market is showing 80 and above, like it is showing right here, then it means that the asset, which is Ethereum USDT, is overbought. That means buyers have bought a lot, like bulks of the asset. Like buyers are in control for a very long time, and now they want to sell it because there's scarcity in the market and sellers want to come in. All right, so now since we know this, and the current price of Ethereum is at 84, it means that it has been on the buy side for a very long time and it is currently being sold, right? So the sellers want to actually take over the market. That is just what it means. So regardless of the candlestick that is forming right now, you're going to see a green candlestick. Okay, you're going to see a green candlestick that's forming. Regardless of this green candlestick, the stochastic RSI is telling us that this market will continue to go down. So it will continue to go down until it gets to a level where it's maybe 20 or let's say 19. You know, that's where we are going to know that the sellers don't have much strength again in the market. So we have two confirmations now. MA50 is above the current price, and now the stochastic RSI is telling us that Ethereum is overbought. It wants to go down. The third thing is the Bollinger Band. All right, so the Bollinger Band is a technical analysis indicator that primarily measures volatility. Volatility technically means the rise and fall of crypto asset rapidly, or the ability for crypto asset to rise and fall in a very short period of time. For instance, if Ethereum has the ability to go from 2000, its current price is 2696. So if Ethereum can go from 2696 to 2005 within 30 minutes, then back to 30,000 within 1 hour, then it means that Ethereum is a volatile token. So if the market hits the lower band, so this is the lower band. Sorry, this is the lower band. Okay, this is the upper band, and this is the moving average line. Okay, on the Bollinger Band. Now, if the price is within the lower band, like it is currently, okay, if the price is within the lower band, it means that there is low volatility. Okay, it means that price wants to go up, and if it's within the upper band, it means there's high probability and there's much probability that the price or the candlestick, the price wants to go down. Okay, so let me give you a quick hint. Whenever you see price, okay, whenever you're on the daily time frame or 4 hours, or depending on the time frame you are, and you see price hitting this place over here, okay, like hitting the upper band, okay, then there's a tendency that the price wants to go down, and whenever it hits the lower band, there's a tendency that the price wants to move up. Okay, that's just by the way. We're going to make a full video on how to be able to use only Bollinger Band and some other few indicators to actually predict market direction. Okay, so now we have found out, or we have noticed, that the price is currently on the middle band, okay, which is the moving average. Okay, it's currently on the middle band, and there's something we need to understand. When price is going down, okay, or when the price of an asset is going down, it is almost forbidden to touch, like the price forbids to touch the upper area. Okay, it's forbidden to touch the upper area. You're going to see that if a price of an asset is on a bearish momentum, there's going to be a lot of activities in this area. Let me show you. There's going to be a lot of activity in the lower band area. The lower band carries a lot of activity compared to the upper band. Only this alone can be able to tell you if the price of an asset is going down or up. Okay, so as we have seen, the price of this asset touched over here. Okay, it touched the middle band, which is the moving average, and went back down. Okay, and then our stochastic RSI is telling us that it has been buying for a very long time and it wants to start selling. Okay, so we have all the indicators telling us that Ethereum USDT wants to go down. Okay, so having known this, the next thing you have to do is to switch to the 4 hours time frame. Okay, so all you have to do is to toggle this 4 hours on. So when you toggle it on, you're going to see that this 1 day is going to be toggled off and the 4 hours is going to be toggled on. So the 4 hours, like I told you in the previously, the 4 hours helps for market context. So what market context means is that within that 1 day candlestick, how high is the market going to go before it continues to go bearish? Because we know that the overall movement is going to be bearish. So let's toggle on the 4 hours time frame. So on this 4 hours time frame, as you can see, the market is going up and down, up and down. Okay, so every 6 candle on this 4 hours time frame is representing 1 candle on the 1 day time frame, because 4 hours multiplied by 6 is 24 hours, making 1 day, making 1 candle on the daily time frame. All right, I hope you're understanding. So this, on the 4 hour time frame, the stochastic RSI is showing 17. Now this is where most of us get confused. The stochastic RSI is showing 17, okay, 16, 17, while the stochastic RSI on the daily time frame is showing 87, meaning that price wants to come down. But over here, 16.9 is telling us that price wants to go up. So what this technically means is that despite the fact that the price or the overall price wants to go down on the daily time frame, which the daily time frame we all know is more accurate than the 4 hours time frame. So what this is telling us is that the price must first of all go up to a certain level before it actually goes down to its original level, to the place that it's actually heading to. So there's going to be a little fluctuation. That is just what it is telling us. So if you're just using one time frame, which is, let's say if you are using the daily time frame only to predict market direction and see if the market wants to go up or down, and then you set your stop loss. Let's say the market wants to go as high as let's say 2,745 right here. By the way, I'm on a live trade right now. Okay, as you can see, I'm having $0.73. I used only $40 on this. I'm gonna come to that place. So that being said, let's say the price wants to hit 2,745 on the 4 hours, meaning telling you that the price might go as high as 2,745 before maybe after 4 or 8 hours the price will continue to respect the daily time frame to go back down to 2,650 or even lower than that. All right, so this is I just placed my stop loss over here and my take profit over here. I'm going to tell you why. So if you're using only the daily time frame, maybe you can put your stop loss at let's say somewhere here, maybe somewhere here, right, which is 2,716, and the 4 hours has already shown you that it is on the stock RSI is on 16, meaning that the buyers will actually push the market upward, okay, before making it go down. And the strength of the bull is very high because stock RSI 16 is a very low oversold value. It means that the market might go as high as this 2,745 before it goes down. And some of us will just make mistake and just place our stop loss over here, 2,713 or 2,716. All right, so the market will go up and pass this 2,716 that you've placed your stop loss all the way to 2,745. okay, taking you out of the market, making you be at a loss before finally going down. And some of us that trade with emotion, if you see that the market has stopped you or take you off on 2716 and it's currently at 2740, then some of us are just gonna rush and buy because they're seeing that the market is going on a bullish direction. They just buy. They don't know that the bull movement is just temporary, because the 1 hour is more dense and more correct than the 4 hours time frame. Okay, so they'll just buy at 2750, and when you just buy, the market will start going down, respecting the daily time frame. Now tell me, some people are just going to say forex is calm. It's like these people are looking at me when I place a trade. It's just going to, no, it's because you're just you are not using it's because you're not using multiple time frames. Like, using multiple time frame is a very, very essential thing to do. All right, so we all know now that despite the price movement on the 4 hours, the overall time frame is that the market will go down. Okay, so now how do we enter? Okay, we are going to enter using the 15-minute time frame. Okay, so having this known, all we have to do is to click on the 5 minutes. So we're just going to click on more. Okay, so when we click on more, it's going to bring us to another interface that is going to display a lot of time frames. All we have to do is to click on 5 minutes. Okay, so now that we've clicked on 5 minutes, every candlestick over here is representing 5 minutes of activity. All right, it's representing 5 minutes of activity. So there are a lot of false candles on the 5 minutes, but that's not what we are here for. All right, what I mean by false candles is that there are noises in the market, like buyers buying bulky and then selling bulky. So that's not why we're here. We already know that the market is going to go down, but before it goes down, it's going to tend to go up to grab liquidity and have more power to come down. All right, so all we have to do is to look for any confirmation signal. So like I told you, I'm currently on a trade. Let me show you what I mean. So all I have to do is click on trades right here. So I'll just go down. See, I'm currently on a trade. I bought Ethereum and I know that it's going to go down. So I'm currently on a $0.47. If you can tell, you're going to see that at the beginning of this video, I was even at a loss, but now I'm 0.4. I want to have a profit of, let's say, $5 to $10 before I actually go out of the market. I'm just using $40 for this. All right, I'm using $40 for this, and my leverage size is 30x. But guys, please, if you're a beginner, I'm advising you, please use 5x, anything 5x and below. For a starter, you have to use 30x if you know what the market is going to do, or if you actually know what to do, or if you know how to risk or manage your risk. Okay, 30 and above, you have to know how to manage your risk. So on the 5 minutes time frame, all we are going to look for is entry. Okay, all we are going to look for is entry. So what I did was that, we talked about break of structure on our previous video, right? So all you have to do is look for that break of structure. I'm going to share the video. I'm going to put the link to the video description so that you can see. So this is a break of structure over here, which I saw. Okay, there's a break of structure. Let me draw it properly. There's a break of structure over here. Okay, another break of structure over here, a bullish break of structure, telling me that the market is going to go up. Okay, forming a high, a low, a higher high, a higher low. What I mean by higher low is that this low over here is higher than the previous low. Okay, so a higher low and then another higher high right here, but it is a week to week high. So over here is another break of structure, guys, as you can see, right? Meaning that there's another higher high over here. Okay, so after seeing this, all I'm looking for is a change of character. Change of character meaning that either the high or the low is going to get disrespected, and I found one. So after the retest, all right, so this is what we call the test. Let me show you something. For instance, if the market is going this way, all right, then it's made a higher high, a higher low, another higher high, and higher low. So what change of character means is that if the high is not as high as this other high right here, so it just gave a little high but not as high as this, and then it gave a lower low, then that means we have a change of character over here, right? So all I was looking for right here is a change of character. I am looking for a change of character over here. So it's either, this is our last high, all right, our last higher high. Let me draw it properly. This was the last higher high. So I'm just looking for something that will actually make it to get disrespected. So a retest came, right? This is the retest, making another higher low, but then it did not go as high as this previous high over here. All right, so this was the previous high and this is the new high, so it's like kind of like equal high, right? So this is where our change of character lies, and then it started to go down, and this was the previous low, right? This was the previous low right here, and the candle kept going down. You see, it has disrespected this low, right? So now this is where I'm going to enter the market. All right, so the moment it got disrespected over here, this candle, okay, sorry, let me draw it properly, over this place, the moment it got disrespected, I'm just going to wait for a confirmation candle, or allowing this candle to end at the what is it called, at the sell section. Like let it just be a red candle. So after it closes, I just entered the market, right? So I entered the market right here, and then I predicted that the market is going to go down, right? Which it actually did. It went down and it kept going down. So I'm currently on a live trade and I won't pull off this trade. Okay, I'm looking for $6 or $7, and I'm gonna find it. I'm gonna get it. And please do not be making mistake. Like for instance, if this value over here, becomes minus, as you can see, it even reached $1, but it's at $0.06 plus $0.06. Just because it's going down does not mean that I'm just going to remove the money. It can even reach up to maybe minus 2, minus 3. It is bound to happen. Like the market fluctuates, all right? Just because you predicted that it's going to go down does not mean that time to time the market will not actually try to threaten you or get you scared. Okay, and there's one other mistake I want to address traders with. Please and please don't chase trade. Don't chase trades. Don't chase trade. The losers chase trade. Or should I say, market is like a taxi. All right, the trading section is like a taxi. So if you miss the first taxi, don't go running looking for or trying to stop that taxi. You'll just hurt yourself and get yourself injured and tired. Okay, and be at a loss. Just wait. Exercise patience. Another taxi is going to come. Another opportunity is going to come. All right, when you see that opportunity, just hop into that opportunity and actually make the best out of it. So I hope this video helps, and I hope you have a nice day. Ciao.
So what is the worst thing about becoming a trader?
Now this is gonna sound crazy, but it's because you're gonna end up having too much free time. The whole point of you going into trading is to be financially free. You're gonna be too financially free, you're not gonna know what to do with your time. Trust me, it's a double-edged sword. Trust.